Hello friends, in today's video, we'll be talking about SOFI Technologies, ticker symbol SOFI. SOFI is a San Francisco-based financial services company. SOFI provides a bouquet of financial products that includes SOFI Money, a debit card, SOFI Credit Card, SOFI Relay, which helps keep track of credit scores, SOFI Invest, a trading app that can be used to trade stocks, ETFs, as well as cryptocurrencies, student loan refinancing, personal loans, home loans, private student loans, insurance services, and financial services for companies and small businesses. Basically, SOFI is a modern fintech company and their platform has been dubbed as a super app as they touch upon almost any financial product or service we can think of. This has also helped SOFI in growing their customer base exponentially over the last few years. I want to say upfront that I am very bullish on their future prospects, but before I share exactly how and when I plan to buy the stock, let's take a quick look at some of the key points from their 2021 Q2 earnings presentation. As you can see in this chart, they have over 2 million people using their services, and in the past year, they have experienced a whopping 113% member growth. This really shows that the users love their platform and services, and this can also be seen by the almost near perfect ratings for their app, both on the Apple and Google App Stores. I would expect this exponential user growth to continue for at least another 2 or 3 years unless they make some really faulty marketing or user experience redesign decisions. In terms of revenues, this has also been growing consistently and stood at $852 million for the last 12 months, and it is also great to note that the earnings before interest, taxes, and depreciation has also turned positive for the last 12 months. The revenue guidance provided for the full year of 2021 is for $980 million, which would be 58% higher than the 2020 number if they manage to match their guidance. SOFI would also be reporting their third quarter results on November 10th, so it will be really interesting to see if they are on track to achieve their 2021 revenue and earning estimates and possibly even exceed expectations. One thing to note is that SOFI is not a bank in the legal sense, not yet. However, they had received conditional approval for their banking charter in October 2020, and there is widespread optimism in the investment community that they will be granted a national banking license anytime soon. In September 2021, SOFI appointed Chad Bronton as the new president of SOFI Bank, which could also be seen as a hint that the bank license approval might be very close. By becoming a bank, SOFI will also be able to hold more loans on their balance sheet, and they will no longer have to limit the number of mortgages. The banking license will also allow SOFI to determine its own interest rates instead of having to rely on a sweep partner. So overall, with the banking license, SOFI would be able to expand their operations further and grow their revenues and profits even more rapidly. As you can see here, based on SOFI's early estimates, the banking license could over the next 5 years add another $1 billion to EBITDA, which would certainly be a huge growth catalyst. Another huge catalyst that not many people are talking about now is how SOFI can grow even much bigger by leveraging their recent acquisition of Galileo Technologies. SOFI acquired Galileo for over $1 billion in 2020. Galileo is a company that provides technology solutions to the fintech industry, especially facilitating fintech startups to easily transform their ideas into actual products that are both scalable and secure. Galileo has a well-established business model with clients across the globe and over 79 million accounts. I think this is going to be a huge catalyst for SOFI in the coming years. As you can see here, even though lending is a highly profitable business model for SOFI, the margins are even higher for the Galileo platform. Also, in addition to the incremental revenue and margins that Galileo would bring in, SOFI can also leverage Galileo's large customer base to cross-promote their financial services and lending products. Okay, now that we have gotten all the exciting stuff out of the way, let's talk about the boring topic of valuation and what is a good entry price to buy the stock. At the time of recording this video, SOFI is trading around $20 per share and has a market capitalization of $16 billion. We can also see that the price has been quite volatile over the last year, ranging from $10 to $28, which is actually quite normal for young growth companies like SOFI. Looking ahead, analysts expect to see a price of around $25 to $28 in anticipation of the banking license getting approved. So let's go ahead and look at some scenarios that will help us decide what our profit potential looks like if we buy the stock now. As you can see here, I have laid out 3 scenarios with varying revenue growth rates and net margins. Obviously, the higher the revenue growth, the more valuable the company is going to be in the future, but we can also see in scenario 1 that if the company ends up not growing as efficiently as desired, then we may end up with a loss if we buy at the current price of $20. So to answer the question of what price we should pay today for the stock, it all depends on what is our view of the company's prospects and profit potential in the next 5 to 7 years. If we are super bullish, then our assumptions here in scenario 3 could be considered quite reasonable, and we can expect to make over 147% gain if we buy the stock now and are ready to hold on to the stock for the next 5 years. Or you could take a more conservative view, like in scenario 2 or 1, and choose to wait for the price to fall to levels that look interesting to you. Personally, I think scenario 2 will play out more or less, but I don't want to buy a full position at the current market price of $20. I would ideally like to buy around the $15 range, but in the short term, the stock price may go up if the third quarter numbers are quite good and SOFI also ends up getting the banking license approved. So I'm going to buy 500 shares at the current price and wait for lower prices to buy more. While waiting for the stock prices to fall, I will also sell 5 lots of the $15 put option expiring in March 2022. This way, I'll be able to collect an option premium of $550, which would translate to a 19% annualized profit and an opportunity to buy 500 shares around 25% lower than the current market price of $20. And in case the stock doesn't come down to $15 by March 2022, I will have the opportunity to keep selling more put options and collect more premiums to lower my overall cost basis in the stock. Let me know if you have any questions about options trading or the strategy I'm using here, and I'll be happy to answer your questions. Hope you liked this video, and if you got any value from it, I'll really appreciate if you can leave a like and subscribe to my channel. And as a friendly reminder, please note that I am not a licensed investment advisor, and my videos are only meant to document my views on various investment related topics that I'm interested in. That's all I have for today. You have a great day, and I'll see you in the next video.